jump in the October trade deficit. It's come in at $14.5 billion, which compares with $9 billion a year ago. My colleague Lata is here with us. Lata, lots of imports, less of exports, the rupee depreciation, all that into this number?
Actually, this is not just the trade deficit. What you're seeing as October trade deficit is goods deficit minus services.
Okay.
We normally only look at the goods deficit, and that deficit has come in at 26 billion, as you can see now flashing on the screen. We were okay when it is about 14, 15. Already when we had gone to 17 billion, which is the year ago number, we were actually in difficult terrain. And since then, it has been only rising, and this 26 billion is an extremely disturbing number. Can we wait for the export number to come up? That is the one that should really worry you. Imports have been climbing down. They hit a high of 60 billion. And since then, we've been slowly but steadily coming down. And I think this month's is 53 billion, which we can probably take in our stride. But October exports at 29 billion. Look at that. Look at the comparison. Year ago, it was 6 billion more. Year ago. We should have grown. Aren't we a growing economy? After all destination export destinations are not in recession yet. But in spite of it, the year-on-year fall is 6 billion. And month-on-month also will be an equal fall. If I remember right, the September exports were also about 34, 35 billion. So this is very sharp, clearly indicating, one, that the festival season overstocking, which some textile exporters spoke to us about, if you remember, that is coming to roost. Because they're overstocked, they're not buying now. And secondly, it could be fresh fears of, recession, which is why destination countries are not buying as much. As you can see, the October imports is 56 billion. Okay, so that is a worrisome number. 60 was the worst we hit. But at 57, almost, we are not really in secure terrain. After all, we should have done much better if oil was the only reason. Because oil has fallen from a high of 120 or 110 all the way down to two-digit figures. A large part of the good news in crude is already in this price. And even then, we are $56.5 billion in terms of imports. So crude falling is not going to get too much of an advantage. What it is telling us is that our growth is so strong that consumers are using up more dollars, probably buying iPhones or other consumer items. More cars are selling. That means more chips are being imported. The relaxing of the chip shortage and the container problems, the supply chain problems, actually burdens the import bill, because these are essential imports for us. Right. As we celebrate auto sales for the month of October, we must realize that imported components have gone up, and that's making up for what little we made in terms of the fall in crude prices. Exports are not growing commensurate because the world is not growing as well as we are. Yeah. So our growth is leading to this current deficit.
Higher imports and lesser exports, at least the value. And let's just look at the rupee. If there's any reaction at all. The numbers, of course, as Lata said, in the direction that you don't want the numbers to grow.
It's not reacting, Prashant. The happiness in the rupee market is that we now have the dollars to bridge the deficit. Right. When did we last hear of a negative FII flow? I think it's at least a month ago. So the big fear when rupee was falling was not just current account deficit, but we don't have the capital flows to bridge it. Now there is a confidence that the capital flows are probably there. So it's not yet hurting, but it also means that the downside for the dollar or the upside for rupee appreciation is capped now. Yeah. There were people merrily talking about sub 80 when we started recovering. I guess now that confidence will go away. And the current account deficit worry will come to haunt.
All right, Lata, thanks very much for that. So that's, the trade deficit numbers, and of course, not showing up in the rupee so far, but we'll keep an eye. Fusion Microfinance, by the way, is the company that we're going to talk about